This is Ron Orrell with TheStreet. I'm here with Vincent Fandozzi, and he's just started a new section up with Ardian, the Paris-based private equity firm, and he's in charge of direct buyouts in the U.S. Thanks for taking a little time to talk with us, Vince.
Thanks, Ron. Nice to be here.
So I wanted to ask you about the middle markets and what you see as being good sectors for investment in 2017. What do you think would be interesting sectors for acquisitions?
Well, Ron, we invest mainly in the industrials market, and we're seeing a lot of activity in the industrial, especially in the lower middle market section of it. It's a market that stays pretty stable throughout ups and downs in the financing markets. Within the industrials, we're seeing a lot of activity in things like the plastics sector. We're seeing a lot of owner-operated businesses coming to market now. And also within various sectors within industrials, we're also seeing a lot of chemicals businesses, and we're seeing the trailing off of some of the auto businesses. Is that we saw a lot of auto supplier businesses in the sectors of like those last year that we're not seeing as much anymore. And so basically, again, it's plastics and chemicals. We're seeing a lot of those businesses.
For 2017?
For 2017, okay. Yeah, and we're just starting to see some of the opportunities now that are going to go into 2017.
Okay, cool. And so what do you think about asset quality and prices for 2017? You think the prices are going to be dropping or going up, or what do you think are going to be in that area?
Yeah, no, I don't see anything that's going to change the current environment we're in. Obviously, the political environment is always a backdrop to this, and I'm not a prognosticator, and so I don't have a sense of where that's going to play out. But today, people are still looking for yield and still looking for total returns, and what we're seeing is that is working its way into debt levels and clearly then pricing. Not as much in the lower middle market as we see in some of the other markets, but I would suspect to see the same in terms of pricing for 2017, which is pricing will continue to be, it's going to continue to be tough. And tough from a buyer standpoint. But I also think that the asset quality, again, ebbs and flows a little bit with the macro environment. I think we are, as I mentioned, we're starting to see a lot of owner-operated businesses that are looking for institutional capital for the first time, and as they're thinking about generational planning and things like that, we've seen more and more of those, and I expect that to continue in 2017 and into the future.
And so I'm curious about your philosophy on exits, and what do you think exits will be like in 2017, particularly in the M&A area?
Again, I think back to in the pricing environment, I think 2017 is going to be, again, a great year if you're a seller. It's a little bit tougher to be a buyer, but it's going to be a very good year to be a seller. We take sometimes a little bit different of a tack to selling investments. We don't look to access the IPO market as much as the upper middle markets and the large buyouts. It's usually through M&A, and we usually are seeking strategic buyers in our sale processes. Okay. Strategic buyers have a lot of capital today. They have a lot of, their cost of capital is relatively low, and so we're seeing more and more of the strategics out there, and we're seeing on the financial sponsor community being more choosier, but at the same time, that's because the prices are higher. And so, again, I think that's going to continue in 2017.
All right, Vince, thanks for taking a little time to chat with us.
Great, thank you, Ron.